Hi, I'm Samir Jain. I've been thinking about art as an investment. The idea is to assemble for investment purposes collections of fine and decorative arts, to employ modern financial tools and techniques in the pricing of such collections, and then to enhance the collection's value through very specialized sector knowledge, portfolio construction, research, and other methods. In this art space, transactions are done through auction houses, dealers, private sales, and consultants. So I've learned that the auction house space is around $5 billion or so, give or take, but the dealer and private sales space is unknown. So price discovery varies from the good, which comes from auctions, to something that is almost non-existent private sales. So one sees consultants, one sees firms like Christie's and Sotheby's charge buyers around 20% on an initial $200,000 hammer price, and another 12% or so for prices that are higher. So all of this varies. One issue is that this space is heavily dependent upon expert opinion for valuations at the high end. So therefore, knowing authoritative experts is critical for attribution stability. Arriving at quality judgments, provenance and conditions of art objects is an important factor for ascertaining value. And provenance itself is a proxy measure of authenticity and quality. Another thing that I just found out is a perceived shortage of top quality objects, plus a just-in-time inventory leads to a hoarding behavior at dealers, at galleries, and dealers often have large inventories relative to their cash positions. We also see high operating costs for dealers in some markets, and capital shortages, particularly amongst the smaller and lesser known dealers. And the opportunities to acquire are very unpredictable and may often require a large cash outlay. So you have periods of boom or bust, and the realized price volatility spikes around auctions. And the reality is, estimates may be often a marketing tool. So it's a very opaque sort of an area, and locations and availability of art objects is kept confidential. There are gaps in provenance history. These are widespread, and previous sales histories in the non-auction world are often unavailable. And they say that academic and expert opinion may be controversial itself, or often very unsettled. So attributions can change over time. Forensics is often not conclusive. Sources of price volatility themselves are very complex. So what one needs is financial expertise in order to invest, of course, but combined with art expertise to be able to think about acquiring collections versus individual pieces, how to arrive at diversification, how do you establish relationships with auction houses, dealers, collectors, their size effects in what is a very disaggregated market, and research abilities that can be accessed through consultants, through academics, experts. All of this is crucial if you're even thinking about investing in art. So one needs a long-term approach because it's very liquid, and flexibility in dispositions of collections. One needs protection against fraud, fraudulence, conveyance, etc. So while art is known to be non-correlated with traditional asset classes, one doesn't really have too much empirical history. So arriving at portfolio asset diversification with traditional asset classes is quite difficult. And if you're thinking about investing in a fund structure, there are many disadvantages. Limited partners' tastes are often not considered. There's, of course, illiquidity. Collections may be difficult to assemble, unlike, say, for example, real estate, largely because of unavailability of objects. So while investing in art is something that the ultra high net worth have done, it's not something I think that is really amenable to an institutional construct, and it's certainly not amenable to build a collection for purposes of acquiring and selling. Thank you so much for listening in. Bye bye.